Yo guys, what is going on? And in today's video, I will be going over 5 stocks in the entertainment industry, which I still believe are hot buys right now. I believe there's pretty good profit to be made on all 5 of these stocks. And with that being said, I'm going to get right into it. I have been trying to make more stock videos like this lately, so if you enjoy these, be sure to like and subscribe down below to see more future videos. And yeah, I'm going to roll right into the first one. The first stock that I've chosen today is Dave & Buster's. Now, if you don't know what Dave & Buster's is, it's essentially a restaurant with an entertainment section built into it. So you go eat, and then they have like a bunch of arcade games. You can win like a bunch of tickets, like that kind of thing. You know what I mean? And so you probably do know what Dave and Buster's is, but I thought it might just explain it real quick. With that being said, the reason why I do think it's going to pop off is because of the sole fact of COVID, and I think that the entertainment industry is still recovering. If you look at the 3 months, it's went up 165% just because it opened back up, I'm assuming. But if you look at the 1 year, I mean, it's still down quite a bit. It's at 1650 right now, and it typically trades between, 30. Let's round it down, and we can say 38 to to $45, which is definitely not bad profits if you're looking to flip it because the margins are pretty good. Even when it was at its low points, like throughout the past like 5 years, like 38, $35 is realistically like how low it's like actually going to be. Once it's trading back at regular volume, and it's doing decent numbers again. I'm very bullish on this company. I really enjoy Dave and Buster's, and to be honest, I think that they will open up and thrive again, just because this is like a main place for birthdays. People come here, on date night. And yeah, with that being said, it has went up 165% already in the past 3 months. It looks like it was down to $6 a share roughly. I can see it down over here at 775, but I believe it was in the sixes if I'm not mistaken. So I've been looking into this company for a while, and I'm not gonna lie, I didn't ever buy in because I just didn't really think about it, and it's kind of one of the bigger regrets I have during this whole pandemic thing. But I still think there's potential to make money on. I think you can still honestly double your money once everything opens back up. With that being said, before I get into the next one, I'll just mention it right now that I'm not a financial advisor. Don't take any of this information too seriously. I'm just some guy on YouTube talking about stocks. With that being said, the next one is actually going to be a little bit of a safer bet. It's actually going to be Disney. And to be honest, Disney, it's a bigger stock. I don't know if there's as much potential margin wise, but my perspective on this is it's a very good long term hold. And if you can get a really good long term hold for a pretty good price, then I think that's a pretty good bargain if you ask me. The dividend yield's not insane, it's only 1.5%. But I think over time, this stock, people are pumping money into Disney constantly. They always have movies coming out. They have Disney World, Disneyland. They have all these sources of media. They own Marvel, they own Star Wars. They have so many sources of media. So the company itself is very diversified, and I just think Disney is a banger company. I mean, to put it like that, I think that if you can get a banger company for a good price, it's amazing. And it's like that old quote that Warren Buffett said: "If you can get an amazing company for a fair price, that's better than getting a fair company for an amazing price." And I would consider $117 a pretty fair price for Disney. I mean, in the past 5 years, they have grown, and they were at like a really high growth point before this whole COVID thing, and you can kind of see right here how they're bouncing back up. But I think that even if they're at 117 right now, they should without a doubt be able to trade in the 130s to 140. But to be honest, I'm not looking to sell this stock. I'm looking to buy it and hold it for a good amount of time because it's just simply a bargain. I think that this is a good long-term buy, and that's all there really is to it. Rolling into the next one was actually a stock that was in yesterday's video, and it's going to be MGM Resorts. The only reason I put this in today's video as well as yesterday's is because this really just fits the category for today's video. The whole entertainment industry, and I think this is just a really banger stock. I mean, I talked about it yesterday, and it's recovered a little bit, but like I said, I think there's still room for recovery because it's at $18 right now, and it typically trades between 27 and 33, 34. So even if I think if it goes up to 27, $28, you could still lock in pretty good profits without not a whole lot of work. The dividend yield isn't the best on this thing, but like I said, I don't really look at this for the dividend yield because I'm just going to flip this and then put it, allocate my capital into something else. But yeah, MGM Resorts, they do like casinos, hotels, that kind of thing. If you ever been to Las Vegas, you see that big building that says MGM. They're just a entertainment industry staple, if you will, and I think that they're going to do good over the next couple months just because entertainment's going to open back up. and people have money in their pocket, and that's essentially where it's going to go into. That being said, I'm not going to talk a whole lot more about MGM Resorts just because I talked about it in yesterday's video. I'm actually going to roll into the next stock, which is going to be Six Flags, which if you're not from, I don't know where all Six Flags is around, but I'm from Texas, and I know there's a couple of them around here. I don't know if they're like all throughout the U.S., but essentially it's just a it's a park that has roller coaster. It's a theme park. It's a roller coaster park. It has restaurants. It has venues to eat at. I mean, these kind of things. And honestly, like looking at Six Flags, it seems like they are. I haven't looked into it a whole lot, but like going there from a consumer perspective, they have to be making a ton of money. And I know that roller coasters aren't cheap or anything, but I mean, all the stuff they charge for at Six Flags itself, it just seems like everything's pretty profitable. Everyone's always going. I've never been when it's not busy. And yeah, they have a subscription service like a season pass, which is always like really good for the business model. And if you look at the prices, which I have pulled up right here, it's at $23 a share right now, and I was looking at buying into it. I haven't pulled the trigger yet. I'm not gonna lie, but it looks like you can realistically get like $48 to I would say $60 on an average summer. So I think in 2 summers maybe you'll be able to see this return, and the dividend yield's not too bad. So I think that it wouldn't be bad to hold for a year or two. And I don't even know if it would take 2 summers to go up. To be honest, it could go up in 1 summer. I mean, if we get lucky and COVID just actually goes away and everything goes back to normal. I personally don't know if that's going to happen. I think a lot more people are going to be cautious about being around a lot of people. But I'm just saying I think that Six Flags is a pretty solid buy just for the sole fact of how low it is at the moment. And it's bound to open back up. If you look at all the other entertainment companies that we've looked at, if you look at, let's say, Dave & Buster's, for example, as soon as they opened back up, they went up 165%, and 165% is a pretty good payday. So I think that I think that Six Flags is not necessary. I think that Six Flags is a good buy. I mean, I'm just going to leave it at that. Rolling into the last one's going to be one more theme park, and it's actually going to be SeaWorld. Now, hear me out on this because I do know that SeaWorld, I know they get a lot of hate because the whole, captive animals and all that. But truth be told, is like this is like a place where the typical American family would like to go. You take the kids, you get to see really big sea animals, you get, stuffed animals of whales. I mean, it's just genuinely a good attraction. I went when I was a little kid and I loved it. It's like truly magical for the younger audience, and it's a pretty cool thing if you're an adult. Like you get to go see some big animals. I'm not like encouraging, the wildlife captures and all that, but I do think that it's a pretty cool concept regardless of how edgy it is. And price point wise, which we can talk about, it's at $17.32 a share right now. And it looks like in the past year on a low day it would trade at like $26, all the way up to 36. So I think that even if you could lock this in after buying it at $17.30, I think if you could lock it in selling it at like $24 a share, then you'd be in a pretty good boat. And I think $24 a share is realistic come around next summer. So if you really think about it, that's like I would say 60% profit margin in 1 summer, which really is not the worst. Now whether or not you want to flip this or not is up to you. Personally, I would just because there's no dividend on it. And that's all there really is to it. I mean, I just think that it's a good buy. I covered a couple other theme parks in this list today, just because I think that next summer, it's going to go back to people going to theme parks and going on vacations and enjoying these attractions. But with that being said, those are my 5 entertainment stocks for the day that I think are still at a pretty good bargain price that you could definitely still make some money on. I went over some safe bets as well as some, maybe riskier bets, with the safer bets being Disney just because it's more of a long-term hold, and riskier being, I would say, like Six Flags and SeaWorld. With that being said, I really hope you enjoyed today's video. Let me know down below what stocks you're watching at the moment, as well as what stocks I should be looking into. Maybe some stuff you bought that you got burnt out on, maybe some stuff you bought that you did really good on. I'm genuinely curious to start a discussion in the comment section below to see, what people are buying and selling at the moment. With that being said, if you enjoyed the video, I'm just going to ask that you like it down below. It means a lot to the channel. And yeah, I hope you enjoyed today's video.